Good evening, friends. This is Tarun. Today is 23rd March. We'll talk about only one stock in this video. It's Sona BLW Precision. This stock, this company is, I think it's headquartered in Gurgaon. Uh, and if you just look at some of the things about the company, it makes auto parts for different auto companies. I think earlier it was in the steering making business, mainly for Maruti and some other companies, but now they have ventured into multiple other auto parts. Market capital of 40,000 crores. Stock P is very high, 146. ROCE is 17%, which is good. ROA is 17%, which is also good. Um, okay, what else can we see? Pros and cons. Company has reduced debt. Company is almost debt free. Company has delivered good profit growth. Profit growth is good. Obviously, company has maintaining healthy dividend payout. And the cons are stock is trading at 24 times, and debtor days have increased. Uh, if we look at some of the peer comparison, Bharat Forge, I think is another good company in the same business. Um, so industry P is only 18, and our P is pretty high, like 146, which is one of the downside. If you look at profit loss, yearly profit loss, so the net profit is increasing steadily, and it's growing very fast. Obviously, return on equity in last couple of years we are seeing that 17%. Last year was 17%. Overall, if you look at shareholding patterns, so promoter has 67% of the holding, which is good. FIs and DIs also have decent, and public has only 7%. So overall, it looks good. So fundamentally, the company is strong. The P is very high. So I won't don't invest in stocks with this high P. But I think this is high growth stock. So let's look at the technical charts. Now, what technical chart is showing us is that the stock was in this channel and it was growing very fast from 2021 until December 21. So July to December, it was growing in a vertical way. Now we see a bit of a correction, but what do we see here? Let's look at it. So we see that stock came to here, and then this is the point where it started falling down. It did fall to this place, right? So if I mark this place and this place, this is another kind of trend line, which is not relevant, but I'll just draw it, and I'll tell you why it is not relevant as well. So stock comes here, the buyers pushes it up, the sellers come here. So now we got these 2 points. So we made this trend line using this, right? Then from here, it was sold really bad, came down, and we got another buying area here where the buyers became active and they bought the stock. The stock went up and did fall down, and this time when it fell down, it basically you know closed here. Like, it did go down from this uh, demand zone that we have created. Here it went down, but it came up sharply, right? Again came down, took the support here, again came down, took the support. So there are three times when the stock came down to this line and it was bought, right? So the buyers, we know, are sitting here, right? And the sellers, we see one, two, and now the stock came up, but at the same level got slight rejection here. What are we seeing here is this candle, right? This particular candle, this green candle. This happens, and after that we get this red candle, this another red candle, and green candle, and all these three candles are basically within the shadow of this first green candle. So if you consider this as, this is slightly smaller than a mother bar is like a big candle, right? But if we consider this as a mother bar, all other three candles are in the same shadow of the first candle, right? And what we are also seeing is this pattern here. So normally this pattern is effective at the bottom, so we won't talk about it, but it's something like a morning star pattern, like where prices were pushed down by the sellers, went down, but the buyers didn't allow it to go. So we see this big wick of the candle. So prices came up. Next day we see this green candle. Now what we want to see is that if this candle breaks out and makes another candle something like this, right? Then continue to stay in this trade. If you already have this trade, you can stay in this trade and take a target of this level, which is 776. But if it starts to go down, then basically if you have this stock, you can either exit, because again it may go down. What can happen, it may again go down, or it may just consolidate here before giving a breakout. Why I'm saying that, and its probability of happening both is equal. Like it can go up because the pattern is such that it is consolidating at the top, so it may either continue to consolidate and break out, or it may come down. And the probability of both is same, because why the probability of breaking out is low is because we only have one, two, and this is the third point on this supply zone. If it was a fourth point, I would say that the probability of breaking out is high, because this is third point. What we may see is that it either consolidates or comes back to the demand zone. But if you are invested for the long term, even if it comes to the demand zone, I will say that you know the pattern, right? So if it comes to demand zone, you add more here, then let it come up and wait for the breakout. You should exit out of this stock or book the loss only when it closes below this line, below this demand zone, for 2 days, 2 consecutive days. If it closes below this, then you should be out of this trade. All right. I hope this analysis helped you. Thanks a lot for watching. Have a good day. Bye.